All right, welcome to this beginner's video on learning how to trade specifically in the Bitcoin market, but this is going to apply to everything. We're going to be covering what trading means, the different concepts around how I do it, mainly how it's possible to turn small amounts into much larger amounts, which is obviously what we're quite interested in. And then, how we do that is through reading charts. So I'm going to teach you a little bit of technical analysis and the best places to trade, in my opinion. There's just a few of the things. We're going to go through a lot in this video, and it is going to be your A to Z guide on what's going on. Now, it's worth noting before I get into it that we also have some paid products. So this is going to be a fairly basic course, although it's going to blow you away how much you're going to learn. And if you really are very serious about it, then there's some links in the description for you as well to gain access to courses and things like that, which is going to be a lot like this, but obviously going much further in depth. And if you're wondering why I'm making this video, I run this YouTube channel, 𝗪𝗪𝗧𝗧. At the time of recording, we're at 70k subscribers. I make daily analysis on the markets. I've accumulated some pretty good successes across the years in trading, not just from trading, from other things as well. I've got a Ferrari, so that's pretty cool. Bought cash, buying a house here in Dubai. I'm 19, got a bunch of staff members, so I can flex for all day. But the point is, I've made some pretty cool successes out of this, and I'm going to try and make this as simple as possible for you. The main thing here is we're going to be talking about turning small money into large money. So this is not about investing. This is not about anything else like that. This is going to be a tutorial series on how to really trade regularly in order to pull some pretty magnificent results. So you're going to love it, and let's get straight into it. So one of the first key concepts that we need to keep in mind with trading is the concept of buying low and selling high. Ideally, the key thing we're trying to do here is buy something when it's cheap and sell it when it becomes more expensive. So an easy example is you've got a car, it's a vintage car, I don't know, it's a BMW E30 or whatever, I forget what they're called. The vintage, really, really cool BMW cars. You bought it for $2,000, you're selling it for $6,000. That's a 3 times return. If you bought 10 of them, you would have spent $20,000 and you would get $60,000. So you can start to see how the concept here is we want to buy low and sell high. Very, very simple. And in reality, it's relatively simple as well if you're doing things in a healthy way, but people tend to overcomplicate it. One of the key ways that I like to give myself an advantage where I can buy something that I think is going to go up in value before everyone else thinks that is I will carry out technical analysis on the charts. So if I switch over to my screen now, you can see right here how we have some pretty cool charts right here, and really all I'm trying to do is read these charts and analyze these charts to understand what's going on with the price and how I can put myself in the best position to understand what's going on here. So by the end of this video, you're going to know everything about what's on the screen, but let's switch it right back to this for now. We are talking about the concept of buying low and selling high. Charts are one of the key ways we can achieve that, and if you are a short-term regular trader in the market, it's one of the only things you can go off, because there's only 2 forms of analysis you can do in these markets. Number one, you can carry out fundamental analysis, which means research on the asset. You think Tesla's going to go up because it's got a strong CEO, it's got a strong product, a very loyal fan base. That's fundamental analysis. You think Bitcoin will go up because it's mathematical, it goes against governments, it's deflation. That's fundamental. You can only do that once. And then there's technical analysis. This is where the picture changes every single day. There's a new chart to analyze every day. There's new data. There's psychology you can analyze. And you can really weaponize that to make these gains really very quickly. And it's very, very important to be able to do that, because as short-term traders here who are trying to turn small amounts into large amounts, we need to be able to make those profits quickly and consistently. We need to be able to make those profits quickly and consistently so that we can apply that beauty of compounding interest on our bankroll. So Bitcoin could go from here at its current price is about $50,000. Bitcoin could go from here to $500,000, and that would be a 10 times return on investment, which is absolutely spectacular. Very, very good. However, if you're playing with $20,000, that's only going to give you $200,000. If you're playing with $2,000, that's only going to give you $20,000. So the return on investment is not great as it is if you're trying to turn small amounts into large amounts. If you already have large amounts, then you're not watching this video because you're just investing your money and doing the boring stuff. You don't need more money. This is about wealth creation. This is about creating wealth basically out of thin air. That's what we're trying to do with trading. And that means whatever moves we see in the market, we need to do better. You know, just buying Bitcoin and holding Bitcoin and waiting for it to do a 10x isn't going to make you a millionaire unless you're playing with at least $100,000 to start. And most of you are not. And so what we need to do here is aim for those bigger gains by applying things like leverage, which I'll go into a little bit later. If you're not comfortable using leverage, that's completely fine, but I'll explain to you what it is and how it works and why I love it. And as we go on, I am going to be showing you my chart on screen and different things like that. So all the links to everything I'm using will be in the description. The TradingView application where I actually look at the charts, the exchanges I use, literally everything you might want or need will be in the description. You don't need to use those links if you don't want to, but they will give you special bonuses. You can just Google whatever I've mentioned as well. You can find your own links or your own alternatives. So I want to show you a little bit of what this looks like on a chart and how we can actually apply this analysis in the real world, and then kind of expect where these moves might come up in the market. So let's switch right back to my screen here. So with this chart on Bitcoin, I'm actually going to take a fresh chart. And once again, like I said, this is all going to be in the description for you. So, you know, if you want to follow this along as I'm doing it, you can definitely do that. And what we have on this chart right here is the price of Bitcoin according to the one-day chart now. So it's worth noting, first of all, that each of these individual bars that you see on the chart, you know, like each of these, you know, it doesn't matter what color they are. Every individual bar that you see on the charts is called a candle. Candles are very, very important to understand, and there's a lot that goes into them, but we're not going to go into that today because, like I said, this is going to cover the basics. It's just going to give you what you need to start, and from there, if you want to learn it, you can Google it. Of course, we have our own resources. We've got our 𝗧𝗢𝗥𝗙𝗦 Academy course, which goes into very, very minute detail about each of these things. You'll know absolutely everything from A to Z in there. But what I want to show you is a quick, easy example of how we can apply some analysis to the market now, and actually going back a little bit, because what we had right here, what I want to highlight to you right here was the price of Bitcoin. Looking at the bottom, you can see the date, right? So you can see the date around over here. We had the price of Bitcoin at roughly June 2017, maxing out at $3,000. Right here, you can see that the price topped out at $3,000. So it took, I don't know, from the beginning of 2017, Bitcoin was at $1,000. It took about 6 months to reach $3,000, and from there Bitcoin crashed down massively until it fell down to 1850. So that was a pretty steep correction. Off memory, that was something like a 35% drop. That was 36%, so pretty accurate. It was about a 36% drop when we peaked over here, and then we made a really big run up. And this is very important because by having the price max out over here, we did something called establishing resistance. So there are two key concepts in these trading markets. There's support and resistance, and both of them are very, very important in allowing you to potentially look for areas where the price can get rejected from, the price can go down, or where the price can bounce up from. So those of you who already know a little bit about analysis now, you know what I'm about to say next. But with resistance, what we tend to see is that if we establish resistance over here and the price gets rejected, if in the future we end up trading above this resistance area, which we did, we ended up trading above this resistance area over here, then old areas of resistance become new areas of support. So let me declutter the chart and say that again. We established resistance at the $3,000 range, and we know that because as soon as we hit 3,000, just look at the right hand side over here, it'll tell you the price. As soon as we hit 3,000, bam, big sell-off, really big sell-off. There was clear resistance over here. However, when we rose above this level and we came back down, the price stopped falling at the previous area of resistance. Let's break this down again. So we got rejected at the $3,000 area and established resistance. And when we fell down, we used the old resistance area of $3,000 as a new area of support. And it triggered a very strong bounce. In fact, we never fell down to this level ever since that point. It took about, I don't know, a day to rise up by 30%, which was very, very impressive. But what's more impressive is like I just said, we have never come back down to this price level. And this was nearly 4 years ago. So old areas of resistance tend to turn into new areas of support. And I did jump a few steps right there. So let's break down with a little bit more detail what support is. It's probably easier if I play the chart back from a different point. And really, you know, just use some basic tools to illustrate where you might be able to find some of these support areas. I think a good support area to highlight would be the $6,000 area right here. So let's take my box tool. I'm just drawing a box between $5,700 and $7,000. This box is probably a little bit too wide, so I can manipulate it a little bit. And now I've shortened this box, and you can see quite clearly on this chart now what I've done is I've drawn a support area. This is an area where the price tends to fall down to and then bounce off continuously. Very, very important. We formed support here, and the price is bouncing off this blue box, which is absolutely great. The reason this is useful is if you know where a support level is, you can start to predict where the market might bounce, which might give you a good entry. For example, if we replay the chart and we look at the market from this point, there is now enough data on this chart to draw this blue box that I've drawn here. As you can see right here, we established resistance. Look at this. If I zoom all the way right back in, we established resistance at the $6,000 level right here. You can see that very clearly. We hit the all-time high, got rejected, fell down. Afterwards, we broke above, we fell back down to this level, and we turned an old level of resistance into a new area of support. We can see that it's support because we bounced off this level very, very well. That tells us a lot about this area. And the reason I'm saying we can draw this box is because since that point, the price fell down to this box again once, and then nearly fell into the box twice. We don't need exact touches. Analysis is subjective. It's fine. We don't need exact touches. This is close enough. We fell down to this point over here. So now we've got a total of 1, 2, 3 instances of finding support on this blue box. 3 times is enough to draw a box. In fact, technically just 2 is enough. You can draw boxes, you can draw lines. I can draw a line right here. Again, I'm not going to show you too much about these tools because that's not what this video is about, but we do have a TradingView tutorial, which you can find by clicking the I in the top right. I believe that's the top right, or in the description, you'll see our tutorials on that, which are part of our 𝗧𝗢𝗥𝗙𝗦 Academy courses. But this was a beautiful test of support, and now we can start to expect that support is there. So what do the smart people start doing? The smart people start trying to buy Bitcoin every time the price falls into this area. They would do this by applying orders on exchanges, which I will also show you a little bit about and walk you through how it works. But for now, if you want to get started and watch this stuff along with the video, I would recommend that you pause the video and sign up to some exchanges so that you have it ready when you want to start. I've got the links to the 3 exchanges that I use in the description. The only one that I think is worth signing up to right now is Bitmex. So you can follow the link for Bitmex in the description down below. It's spelled like this. Just look down and you'll be able to sign up. There's no KYC. They're not going to ask for your passport or anything like that. It's super simple to get set up, and you can follow that link and get some bonuses when you start. But what they will do is set some buy orders around this area. They will try to buy Bitcoin if Bitcoin falls down to this area. And if we play the chart forward now, we can see quite clearly that when we end up topping out at about $10,000, we fall all the way back down into this box, and then we bounce up again. So everyone who had orders set over here, obviously the orders keep going on through time. Unless you cancel the order is going to stay there forever. Everyone who set their order at this price level would have had a very good entry level on Bitcoin. Bitcoin would have fallen down to $6,000. You would have previously identified that there is some support to expect in this range, and as a result we might end up rising higher. And because you've done that, you've now entered a position on Bitcoin where it started to rally upwards. We come back to a problem now though. See, the problem here is that if we zoom in and we measure this move, I'm using my ruler tool. Again, you won't know where these tools are. It's not a problem. If we measure this move with the ruler tool, Bitcoin from the low up to the high goes up by 46%. And that's not much. That's not a very big move. This is where it gets concerning. You see, it takes a lot of effort to plan a move like this and to sell it at the top. And this is assuming that you buy Bitcoin right at the bottom and you sell it right at the top. Realistically, you might buy it somewhere in the middle, you might sell it over here. You know, I don't know. It depends on how good of a trader you are, it depends on luck, it depends on a lot. But 18% profit here in this example, between 18 and 46% profit. Let's say that's a reasonable range. That's not a lot of money. If you're playing with $10,000, 10K would turn into 15K at best. You know, in a more realistic example, I don't know, $1,000 might turn into 1,200. You can see how that's not very exciting. It's not very useful. You know, it's great. It's extra money. I mean, 10K to 15K is enough to, you know, buy a car or repair a car with that 5,000 profit. You can pay off a lot of bills. But again, we're not talking about that. We're talking about Ferrari money. We're talking about yacht money. I mean, obviously, it's super unrealistic. Most people won't get it, but this is what we're aiming for. And so how do we turn a very boring move like that into something much more fruitful? And the way we do that is by applying leverage. With a move on leverage, let's say I applied 5 times leverage, and bear with me because this is going to get a little bit complicated now for a few minutes. If I applied 5 times leverage, that would mean I would be taking on 5 times the risk on my trade, but I would stand to gain 5 times the reward as well. So if the price goes up by 5%, I would make 25%. And the way this works is exactly like a mortgage. If I'm buying a house for $100,000, and I'm only putting a 20% down payment, let's say to make it easy, I'm only putting in a 10% down payment, and then the house rises in value by 10%, that means my $100,000 house has turned into a $110,000 house. It's gone up by 10%, but I only put $10,000 in. So I've just profited $10,000 on a $10,000 position. And that means I've doubled my money. So that's what we're doing when we're applying, when we're applying leverage with a mortgage. That's what a mortgage is. And that's exactly how leverage works in these markets. Fortunately, it's not like you need a good credit score or anything like that. There is no such thing as credit scores. The exchanges back up their own money, and there is a whole process that I can explain, but not for this video. It's not very technical at all in order to use that money to leverage your positions, and it's very easy to access. And like I said, Bitmex with the link in the description below. In my opinion, it's the best place to trade, but you can Google it to find alternatives. That's going to be absolutely great. It's worth noting that unless you're in countries like the United States, United Kingdom, Canada, you will actually need, in those 3 countries I mentioned, plus a few more, you will actually need a VPN to access these websites, and it's on you if you do that. Everyone I know does it, but I can't endorse it. It's not allowed for me to endorse that, but it's up to you. In fact, I should say that you shouldn't do it. However, that's where this starts to become more interesting, because if you are working with, for example, you know, a modest 18, let's say 20% rise, and you've applied 5 times leverage, all of a sudden a 20% rise becomes a 100% profit, because the market moved up by 20%, but you've applied 5 times leverage, which means you're multiplying that by 5. So you stand to gain plus 100%, and doing the math, very, very simple. I don't know, $10,000 times 100% plus 100% is you made 10K. Just to break down this math for you, it is quite simple again, but I think it's worth using a website called Percentage Change. They say that you shouldn't use this for finance, but everyone will. And actually, the way you find it is by typing in percent-change.com. I will leave this linked in the description for you as well. But very simply, all you would do here is, let's say I put in, well, actually, let's calculate the price of Bitcoin. Let's say I bought Bitcoin at $6,000. That means I entered at $6,000 and I sold Bitcoin at, let's say, $7,000. So it's a $1,000 move. It's, I don't know, 15% profit. Let's calculate it. 6,000 to 7,000 is a 16% change. I would multiply this number by 5, because in this example I've selected 5 times leverage, and I would stand to make whatever 16 times 5 is. I don't know, I'm terrible at math, and that's another thing that you'll be glad to find out about. You don't need to be good at math to be good to be a good trader. I dropped out of school, you know, like that's how little an education is worth in the game of trading, which is also one of the beauties of it. But whatever 16 times 5 is, I still can't do the math even as I speak, but it's probably around, I don't know, 70% profit. In fact, we can Google it. So 16 times 5 is an 80% profit. So pretty good gain. And that's where now, if you are trading with $10,000, a very boring $2,000 profit, because it's 20%, or in this case it's 16%. So a 16% profit on 10,000. Well, we can throw it back in the calculator. 10,000 multiplied by 1.16, because that's 16%, gives you 11,600. A very boring profit like that turns into $10,000 multiplied by 1.80, I guess. You've got $18,000. So just because you've applied 5 times leverage, you've nearly doubled your initial starting capital with one trade. And the idea is that you rinse, repeat this and do it over and over and over. So I'm going to come right back and explain a little bit more about the mechanics of leverage and how we can apply more analysis in the charts as well. Hope this is all sticking well with you so far. And if you have any questions, please write them down, put them in the comments, and I will get back to you as soon as I can. Cheers. All right, so before we move on to diving a little bit deeper into the leverage and charts and things like that, we did skip quite a few steps at the beginning of this video. And the reason that we skipped these next steps was so that the way I like to teach things is I want to do things that will help you minimize how much you screw up in the future out of an inability to screw up. So put simply, the way I like to teach about crypto trading is in a way where I'll teach you how to do things safely before you have the tools and the know-how to screw anything up in the first place. And that's why we spent a lot of time talking about different mechanics, you know, brushing up on basic fundamentals and things like that. And now we'll answer the very, very simple question of how do you buy Bitcoin? Where do you buy Bitcoin from? Maybe even how to store it, different things like that, how to move it around. This is a very, very important part of the video because most of you probably already have a little bit of Bitcoin. You might be slightly familiar with the process, but if you're going to be doing this seriously, you need to learn a little bit about operational security as well. Unfortunately, that's all too much for me to go into in this video alone. So what I've done is I've already recorded a completely separate companion video, which is all about answering that question. How do you buy Bitcoin? Where can you buy it from? How to move it around, best practices, general operational security ideas as well. That's a lot of very, very valuable information, but unfortunately, it would be too technical to put in this video. So what I've done is I've put it in the top left, top right, wherever you can see this right now, a link for you to gain access to that video. Now, that video is actually part of our wider 𝗪𝗪𝗪𝗪 Academy course, where I'm teaching you absolutely everything I know about trading from A to Z. This video is very much a beginner's taster kind of experience. You're still going to learn a lot because the content's amazing, but the course is everything you need from start to finish. So we do cover analysis very much in depth, very, very in depth compared to what this video will go into now in the next 10-15 minutes. We cover the analysis, we cover trading, we cover the technicalities of trading, the concepts. There is everything and more that you might need inside of that course, which you will find linked in the description, along with also access to our VIP group, which is the exclusive channel where you can watch me trading in real time. I'll be telling you everything I'm doing inside of the market, the positions I'm planning to open, why I'm planning to open them, you know, where I plan on taking profits, how I'm adjusting my position, how I'm dealing with losses and dealing with wins. There's a lot that goes into the group where you can watch me trade in real time, understanding everything I do because I explain it all. And there's a huge catalog of VIP videos as well. That's a lot for you to go into. So for now, just go ahead and watch that video on how to buy Bitcoin and come straight back to this one. And if you are interested in the other products and services we offer, then check out the description, check out the top comment at the bottom of this video as well, and we'll give you all the information on that. The next thing though, now that you've watched that video, to go into is leverage. I want to demonstrate to you how to apply leverage. There are a few different problems of managing risk safely and different things like that. So actually what I'm going to do is I'm going to conduct a little bit of analysis, but before that, I'm going to literally put a trade in on an exchange and show you exactly how I'm doing it to really translate all of the concepts I've been teaching you into real world examples. So I'm going to show you that right now on screen, and then we'll jump to a little bit more analysis where I'm going to show you some final skills on how to analyze the markets. And from there, you're pretty much going to be ready to go. So if you are enjoying this video so far, please make sure to hit up those likes, subscribe to this YouTube channel if you are interested. We primarily focus on, at the moment, cryptocurrency. We're giving you nearly daily market analysis in these markets. Right here, got the beautiful lights behind me and slightly changed up the recording setup, but we are upgrading every single day, giving out analysis on these markets as time goes on. So if you want to get in on it, this is the most realistic analysis you'll find on YouTube, and you already now have some pretty good technical know-how of what's going on. So let's carry on. All right, so we're going to start with a little bit of analysis that we've already conducted, so I can give you a great example of how, by the way, found this behind me, beautiful, so we can see how we can actually translate analysis into trades. I'm going to give you a live example of what that would look like, but in the market back in 2018. Now, this is with the same $6,000 area of support that we spoke about earlier on in this video. And really, for me, the key thing that I would be looking at here was this support level, because as you can see, we did establish resistance here, then we established support. You can see that at this very same price level, if I were to drop a horizontal line right here, you can see the price hit this level and saw a little bit of a dip. The next time, the price fell down to roughly this level and saw a big rally upwards. Again, fell down to roughly this level and a big rally upwards. This level was confirmed many times. It became an area of interest when we first found resistance there, but then we confirmed it as support once, twice, thrice, 4 times, and 5 right here. So what I would be interested in doing is, on the 5th occasion here, because it's now become very predictable, I would be interested in buying Bitcoin off that yellow line. I think that it's a fairly safe trade to make. I think that it's fairly sensible. And so I would be looking at opening a position right there. And this would essentially be a very, very simple, very straightforward support trade. I would be looking to find Bitcoin falling down to this area of support. That's where it should be bouncing, and I would look to buy Bitcoin up. But as I gave you the analogy, I would prefer if this, I'm only targeting, let's say, $7,900. I'm only targeting, let's say, $8,000 or seven and a half. Let's say I'm targeting 7,500. I want the price to fall down here, and I want to close my buy position up over here. If we measure this and see how big of a move that is, that would only take the price up by 20%. So I've already told you why a 20% gain is cool, but it's not going to be anything that breaks banks. It's not going to be anything that's life-changing unless you apply leverage. So I'm going to trade this move on 5 times leverage. That means whatever gain I experience, I will be multiplying by 5 whatever loss I experience, because this can become a loss. Whatever loss I experience will be multiplied by 5. There are some important concepts here to do with liquidation and risk, but we're not going to dive too much into them. They're extremely important to know, but we're not going to dive too much into them in this video because that's going to really overcomplicate things. I just want to show you in practice what this looks like. And if you do want to escalate it further and really start to understand the nitty-gritty details of exactly how to do that, then we have got our full course breaking down absolutely all of this, which you can find in the description and the top comment of this video. But right here, I've identified exactly what I want to trade, and I'm now going to make a move to trade exactly that. So bear with me while I switch this right here, and I'm going to move on to the Bitmex platform. So this is the platform that I told you about a little bit earlier. This is going to look very daunting, but I've already minimized a lot of boxes. Now, when you open up Bitmex, it's not going to look like this. It's going to look a little bit more scary. I can actually see if I can make this look normal, how it would look for you, and I've forgotten how to do this. Reset layout right here. So this is how it's going to look for you when you first come onto the Bitmex platform, and I'm telling you now, right now, with the utmost certainty, you don't need to pay attention to anything going on right here. This is completely irrelevant to you. The chart, first of all, is exactly what I was showing you in the previous tab, so there's no reason to have a chart open right here. And I'm just going to minimize this because I don't actually know how to remove it. The recent trades, there's no reason for you to see this. This just shows you the recent trades inputted on the exchange, but this data is always lagging behind, so I don't know why anyone would ever look at that. And that minimizes 2 of these boxes that we absolutely don't need. The order book is useful, but we're not going to go into it in this video either. This is something that you might want to pay attention to at some point in the future, but it's absolutely not necessary. Only things to pay attention to right now are your open positions. These are the active trades that you have open right now, the positions you've closed, the orders that you have to open or close positions, your active orders, your conditional orders, which are another variation of active orders, your fills, this is when the positions are, when orders are executed, and your history of orders. Fortunately, you also don't need to worry about any of that right now. I'm going to run you through a very, very simple example right here. I want to buy Bitcoin at the support level. This support level is at $6,262. So I'm going to enter a limit price right here of $6,262. Limit price essentially means the price that I want to open my position at. I want to open my position at 6,262, and now I'm choosing the quantity that I want to trade with. So in this case, let's say you can see my available balance right here is 0.5 BTC. You have to really zoom in, but you can see it says 0.5 right there. At the current price of Bitcoin, which is $50,000, 0.5 BTC is 25K. So I have a lot of money to play with. Bearing in mind, this is a test account, this is a dummy account, so the money is not real. But I've got $25,000 to play with. Let's say I only want to put in $20,000, and you can see it autofills that to 64%. This is why this exchange is so good. It's very, very user-friendly. It's great for beginners, and I've got my full tutorial on how to use it, by the way, where I'm not glossing over these details, and I'm giving you the full details on what you need to know. I've got the full tutorial for that, which you can also find in the description. It's a lot of homework for you today. What did you expect? This is not supposed to be easy, and when you have learned it though, it is going to be pretty straightforward. 64% of my balance being used up there. If I'm playing with $20,000, if I amp it up to 25,000, you can see that puts me at 81% right there. So I'm just going to set this at $20,000, and I want to play with 10 times leverage. I'm sorry, 5 times leverage. So I'm just going to move the slider over to 5 times, give it a second to update. I can see on the bottom right, I don't know if you can see that because of my camera, but I can see right here now my leverage has been adjusted to 5 times. I've got an available balance of 0.5 BTC. And I'm looking to buy a bunch of Bitcoin. I've just realized actually this is based on the $6,000 price, so I need to amend this down massively. Let me just use this slider. Let's just say I want to play with 75% of what I've got in my wallet. That would be $11,600. So I'm essentially trading with 5 times less than that. The position size is going to be 11,600, but because I'm using 5 times leverage, it's taking 5 times less than that number, which, just to be thorough, let me calculate. That is me trading with $2,300. So I've got, in this case, a lot more money than that in my wallet, but I'm trading with significantly less, which reduces my risk, and I stand to gain a lot more money, $11,600. So all I'm going to do now is I've chosen the level I want to enter my position at. I've chosen the quantity, how much I want to trade with, using the slider here, choosing that I want to use 75% of my available balance. And then I've already chosen my leverage, which is 5x. All I'm going to do now is click buy long, and that's it. Now it's going to confirm a bunch of the details for me. I'm going long at 6,262. Long means I'm buying. Long and buy are synonyms. They mean the same thing. The quantity is 11,600. The cost to my wallet is 75% of 0.5, so 0.37. Those of you who are good at math will know that. My leverage is 5 times. My position size after the order opens will be the same as what I put in here because I don't have a position. So my current position size is 0. So 0 plus 11,644 is my position size after execution. The mark price simply means the current price of Bitcoin. It's not technically the current price, but for the purposes of today's video, that's good enough. The liquidation price is an important number. This tells me that if the price falls down to this level, my entire position is going to be closed out. You see, because I'm using leverage and this works like a mortgage, there's no collateral where with a mortgage they can just take your house if you can't pay your debt. In this case, the position closes if you start losing more money to the point where the exchange would have to take a loss for you. So just a little bit before the exchange starts taking a loss for you is your liquidation price, which, for example, with 5 times leverage would be a 19% loss. All you're going to do is divide whatever leverage you're using by 100, and in this case 100 divided by 5 is 20. your liquidation price will be about 19.5% away. That 0.5% is the fee that the exchange takes. For example, if I was using 10 times leverage, then my liquidation level would be 9.5% away, for example. And that means if the price goes in the wrong direction by 9.5%, because my loss is being multiplied by 10, because I've used 10 times leverage, my overall loss in the position would become minus 95%. You can start seeing now how this tool can be very dangerous if you don't use it properly. You do not want to gamble with this tool. This is the way you can make a lot of money, and this is the way that you can lose a lot of money. So please use this very, very safely. And actually, this is precisely why I advocate so strongly for people to get a solid education of what they're doing here, like gaining access to the courses and VIP packages we have, because what you're going to spend for your education here is going to save you from losing a lot more money than what you could lose if you use these tools incorrectly. This is extremely important, and nobody will tell you this when you first start out. Most of the time it's just for you to figure out on your own, but oftentimes by the time people figure this out, they've already lost more money than they're willing to move forward with. The distance simply shows me how far away the current price is from my open price of 6,200. Currently, we're $44,000 away from opening that position. There's two final boxes here. Let's say I want to take profit. Well, I've already chosen my take profit level. I want to close my position at $7,500, so I'm going to put in 7,500. That's going to show me that my estimated profit here is 0.3 BTC. You can start seeing how this becomes very sexy very quickly. My estimated profit on a position that costs me 0.37, my estimated profit will be 0.3. I've nearly doubled my money just on this one trade if I take profit at 7,500. If my position opens at 6.2 and I close it at 7.5, I stand to nearly double my money just because I'm applying 5 times leverage. And 5 times, in my opinion, is fairly safe. I can choose the trigger, you don't need to worry about that. And I can also choose my stop loss. This is my point of no return. Because I have a liquidation point, where if the price drops down by 19%, or in other words, down to 5,200, and by the way, we can calculate this just to make this clear to you. From this point down, 5,200 is... oh, that's actually a little bit less than I thought. It's minus 16%. So actually, I said 20%. So that's a pretty big fee that the exchange would be taking. Because I've got a liquidation point, I could set that the point of no return, where I think that this trade has failed and I want to leave this position, that point of no return is going to be at 5,700. Why is it 5,700? Because the price never fell down that low on this dip, or this dip, or this dip. So I'm essentially thinking that if the price falls down to this level, then it's probably not finding support and it's probably just collapsing. That's what a stop loss is used for. It's used to protect you when things go wrong. So let me just put in 5,700, and it's going to show me here that my estimated loss is 0.18 BTC, which is a very, very big loss. These are just rough numbers that I'm using for examples. In real world trading, you will be working hard to make sure that these numbers are as clean as possible. This is just a rough example. Now that I've done all of that, I'm going to hit confirm, and that's it. My job's done. If the price of Bitcoin falls down, it's in my active orders tab, as you can see here. If the price of Bitcoin falls down to 6,262, the exchange will automatically open my position with 5 times leverage. If the price then rises up to 7,500 afterwards, the exchange will automatically close my position. I will wake up nearly doubling my money. That's the beauty of leverage trading. That's how it works so well. That's why it works so clean. And I think it's extremely important to be able to keep these things in mind, because if you know how to use a tool like this, it can really accelerate your process. We're doing something here which is a massive shortcut towards building wealth because we're applying this extremely critical tool in this market. We need to learn how to use it safely, properly, and consistently. These are quite difficult to do. Why? I mean, technicals, practically speaking, is very easy to get the grasp of. But the real problem is your psychology. This tool is so powerful that it turns people into gamblers. That's what we need to avoid. You need to avoid turning into a gambler. And there's a lot of ways you can do it, but the number one way to avoid becoming a gambler is by having hard set rules. You will never trade with more than X amount of money because you're not willing to lose more than X. You will never trade more frequently than Y. for example, no more than 2 times a day. You will never trade while you're drunk. You will never trade when you're angry, and so on. There's a lot of crucial principles which are unwavering, and you cannot ever budge on them, in my opinion, when it comes to things like this. And if followed well, you stand to use this tool in a very safe, very productive way. That's exactly what most traders in these markets are doing, and that's how they're able to turn smaller amounts into large amounts. They're essentially tapping into that power of compounding profits way faster than the average person ever could. So there we go. Things are going a little bit crazy on my side right there. The final thing that I want to show you all in this video is actually back on the charts. I just want to run through a little bit more analysis with you. I want to point out what trends could be showing us, because this is extremely critical in my opinion. This is something that could actually be very valuable for you in the market, which is essentially being able to identify when the market has entered a particular trend. So from here, we can see that it's pretty clear from $20,000 that the market has entered a downtrend. We're trending down. We keep trending down. Sometimes the price does not trend down. Sometimes the price moves up. Sometimes it forms a W shape like this. Take a look. We got a W right here, and it's fighting the trend and moving upwards. But overall, even though it's fighting the trend, just like right here with a small example, just like right here with a small example, the overall direction of the trend is downwards. This is quite clear to tell. We see other signs like that right here as well. While we're inside of a downtrend, we're also setting highs which are each consecutively getting lower. Take a look at this. Our first high, 20,000. Our second high, 17,000. Our third high, 11,600. Fourth at $10,000. Fifth at 8,500. I remember these levels off by heart because I was trading so frequently at that time and still do, and so on. I think the next one is at like 7.5 and then 6.4, something like that. It's very clear that within this downtrend, our highs that the market can set are getting lower. And that shows you, as a representation of strength, that this market is losing strength if it cannot push the same highs as before. If each time the strength that this trend has is getting weaker, that's telling you something about where the trend might be headed. So a good example is this. You're really tired. You've been boxing for 30 minutes. Those of you who've ever gone boxing, you know how tiring that is. You've been boxing for 30 minutes, and each subsequent hook that you throw is getting weaker. That is a sign that things that you could be ready to collapse if you keep going, right? If you kept going from half an hour to 2 hours to 5 hours to 6, and your hooks are getting weaker, your jabs are getting weaker, and so on, that is a sign that you're running out of energy. And the next thing that's going to happen is a collapse. And that's what we saw in this market. Because our highs in this market kept getting lower. Take a look at this. Look, the highs just kept getting lower. We could not push the same highs. Look, topping out at 7.5 right there, as I said. The highs kept getting lower. The market could not hold strong levels, could not hold good levels. I mean, that's what ended up causing the collapse in the market. If you were aware of the trend, and you are aware of other things, like being able to look at where the market is topping out and identifying where there might be strength or an absence of strength, well, then you've got a pretty clear indication of where the market might be dropping, why it might be dropping, and so on. And that's another extremely powerful way to carry out analysis. There's many ways you can do this. It's endless. It's an art. It's a craft. You're always a student. It never, ever ends. And that was one beautiful example of how, if you were paying attention, you could have potentially made a lot of money on this move. Personally, I made 60% on this rise. The market then started trading upwards, and I stood to make roughly 360% on the next trade that I made, because I actually saw that the trend was reversing here. Take a look at this. Now, whereas the highs were getting lower in this case, which was an indication of the market losing strength, over here, the lows were getting higher. See, the highs were getting lower, which shows that the market was losing strength. In this case, the lows were getting higher. And that's telling me that people who want to sell the market are getting weaker. That's what this was showing me. People who want to sell in this market were getting weaker. They were losing strength in the market. So on this day, on April 1st, 2019, this is one of the trades I will never forget, hopefully for the rest of my life, I decided to go long on Bitcoin with 10 times leverage. And that turned into a trade that booked me a 360% gain. That means, and it wasn't a total gain, that's just the maximum gain that I closed. I opened it right here, somewhere around here, 3,990 if I'm not mistaken. Let me find that level, somewhere around there. And I closed it roughly around here. 44% move. It was actually a 34% move or 36% move on 10 times leverage. It turned into an absolutely phenomenal gain. You can do the math. $100 enjoying a 360% gain will turn it into $460. That is absolutely huge. It is potentially even life-changing money. So being aware of these things and being able to spot them and identify them can be the most important thing that you can do in this market. And this is where the magic of trading is. If you're able to build your skills on this and learn exactly what to do, which you can do, learning the key concepts of this kind of thing will take you a day, 2 days. I mean, you can literally rush through it all like a Netflix series and you'll know it. It's actually not that difficult to learn these concepts. Granted, you should probably take weeks, maybe even months, take your time with it, but you don't have to. The difficult part is in implementing this. It's in managing your own psychology, making sure that you don't slip into gambling tendencies and so on. This can become addictive. This can become something where you're in psychological spirals that are damaging to you. It can become a very, very dark place because your rewards are so high and people become infatuated over them. People really chase them if they're subject to gamble and so on. That's where our content comes in. I've gone through those spirals. I've messed it all up a million times, more times than I'd like to admit. And from there, I've learned my lessons. I actually used to be one of those gamblers, one of those really bad traders, and I quit many, many times. And my story of how people know me now as being the trader I am now is that I quit many times and I always kept coming back to it because I was crazy and I was young and stupid. And the final time that I came back to this after quitting, I decided, fuck it. This time, I'm going to do it properly. This time, I'm not going to say that I'm going to do it differently and then start gambling again. This time, I'm not going to say that I'm going to do it differently, but not trade safely, and so on. These are key principles. I decided that I'm actually going to do this the way that people in the books I read do this. If you're curious about the books I'm reading that I have read on trading, they're also linked in the description for you. And I decided I was going to do it by the book, 100% precisely. And that's what triggered the biggest win streak I ever had in my life up to that point. I've since beat that win streak just a couple of months ago, and I'm doing very, very, very well now in 2021. But that win streak stuck with me for 2.5 years. I couldn't beat it for 2.5 years. That's how good that performance was. And it's purely because I stopped looking for shortcuts. I started trading in very clinical ways. I removed my emotion from the market and so on. There's a lot of different things that went into it. And what I'm showing you inside of the VIP group is the result of that. You're able to watch me trade in real time. I'm telling you exactly what I'm trading, where I'm trading it, how. I'm giving you tutorials on it. I'm telling you where I'll be taking profits, where I'll be moving my stop loss, and how I'm adjusting that plan over time, and explaining why I'm adjusting that plan over time. That's just the VIP package. There's also going to be real-time analysis on the markets. You get my daily YouTube videos. I'm still probably doing them depending on when you're watching this video. I'm still probably doing those daily analysis YouTube videos, but you get even more round-the-clock analysis from myself and my team inside of the VIP group, along with the insights into my trades. And that's just the VIP group. Those of you who pick up our course side by side you'll get the course for free with your VIP membership, depending on which plan you take. And there you stand to learn all the concepts. VIP is where you watch me apply them. The course is where you can learn them. From A to Z, all bases covered. Absolutely everything you need to know. Unfortunately, this video is not super conclusive. It doesn't cover absolutely everything, but the course does. The VIP channel shows you how I'm implementing it. And if you want to get in on that action, then once again, the steps to join are down below. First link in the description, top comment will give you all the steps that you need to follow to gain access to that amazing content. And crucially, it's all going to be free for you with the course, depending on which plan you take with your VIP subscription. So if you're interested in getting super serious about this, you've just learned how to trade crypto. You've learned the key concepts around it. You've learned some best practices. You've learned a little bit of analysis and what analysis means. I've even demonstrated a trade for you and showed you how that would work. Completely automated. You don't even need to touch it after you've set it, which is probably the best part in my opinion. And as you can see, that trade would have worked out very well because I was aiming to open a long position at where was it? It was at roughly this area. So this would have actually, in this case, my position would not have opened. I'm sorry, it would not have closed because I was looking to take profit at 7,500. And actually, if we really zoom in, you can see that the price didn't rise up to 7,500. That's where this can be pretty bitter. So let's just say I set my take profit level $300 lower. I would then be out of my position in a profit. It could all happen while I'm sleeping, and that is probably the best part about this whole thing, in my opinion. So there you go, you've learned it all. If you have enjoyed this video, if you found it at all useful, even for one little thing, and you think that this video is deserving of your click on the like button, please do show it some love. If you have enjoyed this and you want to gain some more insights on trading, you really want to make this something serious. This is not a channel where I'm going to tell you you're going to get rich. I'm not going to give you anything like that. I'm going to give you the raw facts. They're going to be difficult to digest. They're going to be realistic. And if you're up for that, if you're up for a real path to getting to where you want to be, please do subscribe to the channel. I'm right here. Tick the bell to make sure you don't miss out on this content, and follow these steps on screen once again to gain access to the products that we offer. These 3 clicks from start to finish will take you less than 30 seconds. Click on the first link in the description, and then on the @4flies button at the bottom of any post inside of our free Telegram channel, where you're going to receive more analysis and so on. And then click on send message and just ask me how to gain access to all of this amazing content. Thank you all for tuning in, and I'll see you in the next one.